Hi, it's Dave. So let's say you found a great company with a great new product. How do you know if this company really is going to become the next big thing or if it's going to fizzle out like so many others do? In this video, I'm going to give a framework. It's going to be like a key that can unlock the door and help us to really be able to understand how to pick the big winners in these big new markets. A lot of times people think that they found the next big thing. They have a new company and a new product that they think is going to overtake a huge market and become the next multi-billion or trillion-dollar company. And oftentimes these products, they fizzle out and the companies never achieve the potential that they once thought they had. A lot of people conclude it must be luck. You just have to kind of spread out your bets in many areas and hope that one company really breaks through and becomes a big winner. However, you have to think, is there a way that you can actually beat the odds? Is there a way that you can analyze a lot of the new companies and new technologies out there and pick the disruptive winners before other people realize that they are going to be the big winners? Now, this is kind of the holy grail of high growth investing, or what I call 10x investing. It's investing for 10x gains within 5 to 10 years. And a lot of people think that this has to be a high risk kind of high reward game. And they don't believe that you can actually get high reward, like a 10x gain in 5 to 10 years with low to moderate risk. Now, I'm not saying this has no risks at all. There's always going to be risks with investing. However, I think sometimes people have this image that in order to get outsized gains, they need to take outsized risks. However, I think there's a lot that can be done to reduce the risks. And one of the most important things is what happens in our mind. It's our mindset, our ability to think, to analyze, to reason objectively, to see quantitatively and qualitatively, but most importantly, we need to have the right framework on how to understand who the big winners are going to be. In this video, I'm going to introduce a framework called Crossing the Chasm. And this is derived from a book in the 1990s. It was written by an author called Geoffrey Moore. And this book is more geared toward B2B, kind of an enterprise sales model. And for most people, it has a lot of technicalities, and it's the reason why it's kind of hard for me to wholeheartedly recommend this book to everyone. It kind of rambles on, and unless you're in the enterprise sales industry, it has a lot of terminology and concepts that I think aren't necessary. However, this Crossing the Chasm book contains a few important principles that are almost timeless in nature and gives us the building blocks and how we can build a framework to be able to pick the disruptive winners. In my video yesterday, I was kind of critiquing the raw cheerleading kind of approach to investing. It's where you invest in a company and you're just blindly following any good news and you take anything that's good as confirmation bias. It's like you put a bet on a horse or you put a bet on a sports team and you want that horse or that sports team to win no matter what. And it's easy to get into that box, the box where you just want your investment to work out. However, that box can be a really scary place because you're not using objective analysis and you're not using a solid framework to really analyze and understand this company. A lot of companies, they also change over time, and what might have looked like a great company a few years ago, their company might have changed and it might not be a great investment anymore. So here's what Geoffrey Moore lays out in his book, Crossing the Chasm. There are two distinct groups of owners and customers. The first group is kind of the early adopters, and he groups them with innovators and early adopters together. And the second group is the mainstream. It's the early adopters, the late adopters, and the laggards. In this model, when there's a new technology or a brand new product that incorporates new technology, what happens is the innovators and early adopters, they're so excited to try out the technology. And even though it's inconvenient, and even though they have to put a lot of extra work to make it work, they're still excited about it, and they're going to adopt it and they're going to buy it. However, this second group of people, the mainstream group of people, they're not into technology as much. And if the product isn't easy to use and if it's not convenient, then the product basically is dead on arrival. There's no chance that this product can cross over this chasm, this big gap to reach the mainstream unless the product is a complete product that is so simple to use and easy and convenient. So one of the main concepts here is that there are different customers at different times of the product lifecycle. In the beginning, you have customers that are much more excited about that technology and are willing to go through inconvenience to adopt that technology. However, later on in that technology product lifecycle, you have the mainstream, and these people have a completely different attitude and mindset. They're not that interested in the backbones of technology and being the first to use a product. Rather, they want something that's easy, that's compelling, that's convenient. And in order to cross the chasm, in order for your new technology product to go mainstream, that product needs to be a whole product. And what I mean by a whole product means it has to be a complete experience. It has to be easy to use, convenient, and compelling. It can't be something that's a partial product where the owner or the customer has to fill out the rest with his own hacks or efforts to try to make the product more complete. Now let's take a deeper look into this. Now this crossing the chasm framework, I believe, is the main reason why all companies except for Tesla are having a difficult time going mainstream with electric vehicles. In order for electric vehicles to go mainstream, the electric vehicle needs to be more compelling than the current products that are out on the market. Here's the problem. The ICE or gas car ecosystem is an amazing ecosystem that is very, very compelling. And I think oftentimes it's underrated because it's been in existence for so many decades. You've got amazingly cheap cars. I mean, for $20,000, you can get a great, reliable car. You have gas stations on almost every major corner. If you're taking a long distance trip, you don't have to think about where to charge or where to fill up. Rather, you just go and you know there's going to be gas stations wherever you need them to be. And then there's repair stations everywhere. You can go to some small mountain town and on a vacation and you'll find a repair station for your ICE car. And then you have a new product, an electric vehicle that comes along. However, the electric vehicle has almost no chance at beating the ICE vehicle ecosystem because of one major problem. And the major problem is long distance travel. In a lot of ways, the Achilles heel of the electric vehicle is long distance travel because of its charge times. Now I'm gonna rile up some EV fans here who are early adopters because a lot of EV fans say, oh, charging isn't a problem, right? I just go to superchargers and I spend 30-40 minutes there. But however, most of the people who are saying that it's not a problem, they're the early adopters, meaning they're willing to brace the technology even though it means a little bit of inconvenience for them. In other words, the inconvenience doesn't really matter that much. And there are a lot of people who don't have, let's say, small kids who don't want to be sitting in a supercharger for like 30-40 minutes at a time. You see, the mainstream doesn't really care about necessarily the technology or being first. Rather, they're more concerned about the convenience. They don't want to think before taking a long distance trip. They don't want to think about finding a charging station. And if long distance travel isn't convenient, or if long distance travel isn't as convenient as an IC vehicle, then typically EVs are dead on arrival. In the case of Tesla, they pulled off a miracle. And here's what Tesla did. They said with our EV, our electric vehicle, we aren't going to be as compelling with long distance travel. And that's just the reality. Sure, it might be 10 or 20 or 30 years in the future where long distance supercharging is as quick or even quicker than, let's say, filling up an IC car. But the reality is the IC car has a huge, amazing ecosystem of gas stations that are really compelling to the end user. So what Tesla did is they said, we're going to roll out these supercharging stations. And even though they're going to be less convenient, and let's say you have to charge for 20, 30, 40 minutes at a time, we're going to make it free for our owners. So for the first several years, Tesla offered free supercharging to their owners because they knew that the big challenge they had was they had to somehow compete with the long distance travel convenience of the ICE car. And not only that, Tesla understood that they couldn't beat the ICE car with long distance travel. In fact, that was a big liability. So Tesla knew that they needed to compensate for that liability of charging. So what they did was they said, we're going to compensate by making a better car in all other facets. In other words, our car is going to be far superior than an IC car in every other area except for long distance travel. And with long distance travel, we're going to try to mitigate that disadvantage to the best of our ability. This is the main reason why Elon Musk and Tesla was adamant that the Model S, at the same price as other luxury vehicles, had to give more performance, had to be the best handling car out there, had to have the best design and aesthetics, had to have the best technology, it had to have the best safety, and it had to have the most prestigious and best brand. And this is the main reason why Tesla had a chance. Their strategy was, with long distance travel, we'll try to get as close as we can, but we're not going to beat out the IC car. So we're going to have to compensate in every single other area and beat out the IC car. And I think a lot of people underestimate exactly what Tesla has done. And further, I think this is the main reason why every other electric vehicle is practically dead on arrival. See, there are two main problems that other automakers are facing with their electric vehicles. The first problem is that these electric vehicles are terrible with long distance travel. And the automakers are so slow to try to fix this problem. Tesla was proactive and they knew they needed to roll out these superchargers as fast as they can. And that's why they couldn't wait for so-called cooperation with the government or other companies or other automakers. However, these other automakers, they're so slow to roll out their own charging networks because I think they don't understand that they need to provide a whole product, a whole experience for the end user in order for the electric vehicle to go mainstream. A lot of the automakers are saying we're going to wait for the demand to pick up and then we'll invest more into charging and our electric vehicles. However, it's really not that difficult to establish a supercharger network. Think about it. These big automakers have billions and billions of dollars of cash. They could spend $1 billion and at a cost of about $100,000 per supercharger, you can make 10,000 supercharger stations. And that's an immense network. Put in $5 billion, you can make probably 50,000 supercharger stations around the world. If you want to be more conservative, maybe boost the cost of a supercharger station to $150,000. Still, for $7.5 billion, you could make a supercharging network of 50,000 supercharging stations around the world. It's not impossible for an existing automaker to do it. It just takes the priority and the acknowledgement that in order for EVs to become a mainstream product, it has to somehow address the long distance travel issue. Now, the second major problem that automakers have, and this is a bigger one, even if they had their own charging network, and even if the long distance travel was still more inconvenient, let's say ICE cars, then they need to find a way to make a car that's far superior than their ICE cars at the same price. And this is extremely difficult to do. Think about BMW. They have their legendary 3 Series vehicle, and let's say it costs $40,000, even though it's probably more with options, etc. However, let's say at $40,000 base price, can BMW create a $40,000 electric vehicle that wipes out the BMW in terms of performance, in terms of safety, in terms of handling, in terms of technology, in terms of design and prestige and the whole package? And I really don't think BMW can do it. Even at $10,000, even at a $50,000 EV price tag, I don't think BMW can make an EV that's more compelling in every single area than their current BMW 3 Series ICE car. And this is a big problem because if automakers aren't able to make an electric vehicle that is more compelling in every single area than an ICE car, then they have no chance at crossing the chasm because the EV is going to be less of a compelling car in terms of long distance travel. And long distance travel is super important to the owner. This morning on CNBC, Kathy Wood was on and sharing her prediction that in 2 years, the cost of an electric vehicle will be the same as the cost of a comparable ICE car. Now, I think this is completely ridiculous and ludicrous in my opinion. There's no way that in 2 years, BMW is going to be able to produce an electric vehicle 3 Series sedan that's as good as their ICE 3 Series car at the same price. Another example, there's no way Toyota is going to be able to take their Camry, let's say at $25,000, and produce an electric version, let's say that goes 250 miles of a Camry at $25,000 within 2 years. This is just not going to happen. But with all that said, there's even a bigger problem that the automakers face. So let's say first they roll out a dense supercharging network, which none of the automakers are even trying to do at this point by themselves. Second, let's assume that these automakers are able to create somehow an EV car that is more compelling in all areas except for, let's say, long distance travel than the comparable ICE car that they have at the same price. Even if somehow these automakers are able to do these two immensely difficult tasks, they face a third problem that is even more daunting. And the third problem is that Tesla has already created a car that is far better than probably the car that they're going to be able to create in the future. In other words, the automaker can try to disrupt their own cars. For example, BMW can try to disrupt their own 3 Series car by making a car that's more compelling to the end customer. However, even by doing that, it doesn't guarantee that they're going to win the market because Tesla has already come in and they're disrupting the market already. So in order for BMW to be competitive, they need to go head to head with Tesla and provide a more compelling car than what even Tesla can provide. And I just don't see that happening in the near foreseeable future. What's even more concerning is that these automakers aren't even trying. In other words, which automaker out there is rolling out aggressively their own supercharger network? I don't see anyone. Rather, they're all trying to rely on other so-called cooperation initiatives, the government and other charging companies. Without the dense, super fast charging network, all of these EVs are pretty much dead on arrival. They aren't compelling against the IC ecosystem. But second, Where are the automakers that are trying to disrupt their own products? Who's trying to make an electric car that's far superior than their IC car at the same price? These automakers don't want to decimate their current sales. They're too profitable. That's why oftentimes these automakers will create a separate line of electric vehicles, and these separate line of electric vehicles will be catered to so-called the eco buyer or the Prius buyer. But these cars don't go head to head with their IC cars in terms of cost and performance. They're more for people who so-called want a clean environment or who want an eco-friendly car. In other words, they're trying to go after the early adopter, but the early adopter market has already passed. Tesla has already decimated or taken over that market, and now we're moving into the mainstream market, and these automakers have yet to catch up. What Tesla has proved in their existence is that if you create an electric vehicle that is far superior than a comparable IC car in performance, in safety, in brand, in technology, in all facets, and you somehow mitigate the long distance travel challenge. And if you're able to do that at the same price point as IC car, then you have a chance. And then people are interested and are willing to buy your product. However, on the flip side, if your electric vehicle just isn't as good as an IC car at the same price, then that electric vehicle is pretty much dead on arrival. Sure, you might get 10,000 sales, 20 or 30,000 sales, but you're not going to get mainstream sales of hundreds and hundreds of thousands of cars. And what's even a bigger concern for these existing automakers is that Tesla is starting to enter a place of what I call escape velocity. They're starting to make money and they're starting to bring in a lot of cash. And with that cash, they're starting to make massive investments in new technology. In April, Tesla's going to host a battery investor day, and they're going to roll out their plans to probably increase production at least 20 to 40 times. Tesla is stepping up the game, and they're improving their products and dropping their price. And Tesla really isn't trying to per se compete with all these other automakers. Rather, Tesla's mission is to decimate the IC car. They want to completely disrupt it and rid the earth of its existence. How do you compete against a company like that? So let's take a step back and try to summarize this whole argument here. How do you articulate the Tesla bull case in a clear and compelling manner? I think it's not so much that, oh, Tesla is executing better, or they have lower battery costs, or better battery tech, or they have better technology, or better design, etc. Rather, I think there's a more fundamental approach here, and it's about understanding the framework of how new technology is adopted. You can't release a partial product or a not compelling product and expect that product to go mainstream. In order to go mainstream, you need a compelling, complete product, the complete ecosystem package. And this ecosystem needs to be more compelling than the existing product or ecosystem on the market. And in the case of the auto market, you have an ecosystem that's been around for 100+ years, and that's super compelling in many different ways. And what I'm waiting for is an automaker to step up and say, hey, we're gonna at least try. We're gonna try to provide the complete package. Here's the complete package. It's supercharging, dense supercharging, so long distance isn't as convenient. It's an electric vehicle that's far more compelling than our IC vehicle at the same price because it has better performance, better safety, better technology, better everything. And then now the automakers have the additional challenge where they need to now compete with Tesla. And I actually do hope that there are automakers that can rise to the challenge and actually accomplish what I think is a near impossible task to accomplish. However, I'm not betting on it, and I'm not invested in any other auto stocks besides Tesla. Alright, if you haven't subscribed to this channel, I encourage you to do so. We're looking at investment topics and seeing the future through different angles. We're looking at objective analysis through quantitative and qualitative means, and we're trying to create frameworks and deep understanding of how we can understand disruptive technologies and who the big winners are before others are able to spot them. For the rest of the video, I want to answer a couple questions. The first question comes from Melody116. It says, outstanding. Many thanks for this video. I'm a Tesla bull, but still like to see you talking about the darker side of the story. For example, what if Giga 4 can't be finished on time? What happens if Elon quits? Should we be worried about collaboration between legacy automakers and tech giants? How long do we have to wait until Tesla has enough capacity to supply the whole world? Build quality of cars. Thanks for the great question. Yeah, I think oftentimes emotional bulls and enthusiastic bulls can kind of underestimate the risks involved in investing, especially investing in a company like Tesla. While Tesla does have amazing upside, and if you've watched my previous videos, you've known that I've been holding Tesla since 2012, and I believe it to be a special generational company. But that said, there are real risks with investing in any company. For example, there could be a recession at any time. Oftentimes it's difficult to know the exact timing, but in a recession, oftentimes times the appetite for risk and the multiples that investors give for growth companies whose valuation is largely held in future cash flows, a lot of times that appetite will decrease and people become much more risk adverse and they get into a state of preserving capital and being scared of losing their money. And in that type of environment, you could see the stock price drop significantly. Another risk is you could have production halt suddenly for an extended period of time. You don't know what can happen. Oftentimes there could be world events, there could be wars, or just unexpected huge events that happen. And if Tesla, it goes through a period where, let's say, their Fremont factory isn't able to produce cars for a few months, that could be actually very, very damaging to the company as a whole. While I do think they can overcome that challenge long term, I think it could be kind of a mess in the short term. Another risk factor is Elon Musk. Because he's so important, integral to kind of the future and mission of Tesla, there's a lot of concerns of what happens if Elon Musk is out of the picture. And those are all real risks that we need to consider as Tesla investors. Another risk is a safety issue. What if a real, actually significant safety issue pops up for a Tesla vehicle that it's difficult to repair? And there could be liability or a lot of extra costs associated and brand damage as well. In a lot of ways, Tesla has been fortunate to ride a long wave of a bull market where there hasn't been a huge recession or a big financial, say, crisis in the markets. And they've been fortunate where they've been able to roll out their Model 3 vehicle and get to a place where now they have probably $8 billion or so in the bank. And with that position, the risks with certain factors have decreased. And in a lot of ways, Tesla is starting to become a more mature company. However, this doesn't mean that there isn't going to be volatility and huge spikes in the stock price up and down in the near and midterm. While I'm bullish on Tesla on the long term, and I think that it's their game to lose, it doesn't mean that in the short term or the midterm, that's always going to be rosy. My general advice though with dealing and managing risk is kind of conservative in some ways. On one side, I think there's a different type of investing when you're dealing with your living expenses that aren't being covered now and in the future. In other words, you don't have enough income producing assets to really cover your existing and future living expenses. And in that case, I think it does make sense to be a bit more conservative and to really have a more focused goal on reaching a point where your assets can really cover all of your living expenses, both current and in the future. However, if you're really young, there might be some flexibility in how you approach this first goal. The second kind of mode of investing is once you've got your current and future living expenses covered, then you could be a lot more aggressive in your investing. In that case, I kind of encourage a more aggressive searching and researching and really building your investing skills to get these high reward opportunities that you can approach with a low to moderate risk. Actually, I think a lot of people in my audience might actually be in this first group where their assets aren't really covering their current and future living expenses. And if that's the case, I think there's a lot that can be done to boost income, to start a new business, to do a new side hustle. And there's a lot of creative ways to reach that goal earlier than you think. I'll probably need to do a lot of episodes on that. But if you have any questions, leave them in the comments and I'll check them out. All right, next question is from Patrick R. He says, given your love of reading, which I share, is there a reason you're publishing only video and podcast? As you point out, reading provides such a higher bandwidth. Having content in writing makes it easier to absorb quickly, review, comment, annotate, highlight, and reference, to mention just a few. Actually, yeah, if you've noticed, I do have an audio podcast, so check it out on your podcast player. Just type in Dave Lee on investing. You'll get the same kind of videos. Podcast is actually just my YouTube videos and just the audio that's pulled out. That said, with reading, I'm a big fan of reading. I don't necessarily love reading for the sake of reading. I love learning, right? And I especially love learning new insights that can be cross-applied across different disciplines. And that's just so exciting. It's like a key that unlocks the door to understanding. And when you have all these keys that you pull together, it's kind of like putting together pieces of a puzzle where you can understand very complex things before others can. And this kind of gives you an advantage with understanding, but also forecasting as well. That said, I've actually done a lot of writing in the past, from like 2012 to 2017 or 18 or so. I did a lot of writing on teslamotorsclub.com in their investing section. And I put a link in the video description, and there are hundreds of pages of writing that you can see that I've done in the past, kind of analyzing Tesla, but also giving my insights on investing in general as well. But having started this YouTube channel like about 2 months ago officially, it's been an exciting adventure where I'm starting to pick up there's a lot in video that you can communicate that you can't communicate in writing. For example, there's a lot of audio and visual kind of cues, and there's a lot more bandwidth where the person can make a judgment on how to trust the person and how to intake that information. In video, you can add a lot more personality, and there's just more opportunity, I think, to establish a trust with the viewer. That said, I'm open to do more writing. Would love to go into more topics, and I'd love love to actually do more in-person workshops. I think that would be a fantastic next step as well besides these videos. The next question comes from H. Mahia. He says, hey Dave, are you putting together a team? I want in, serious. All right, so currently I've got 3 team ideas. First, everyone who's watching this can be part of my team of viewers in a sense. And I encourage you actually smash the like button before you watch the video so we can actually encourage the spreading of these videos. And that would be super helpful as a person who's watching these videos. The second type of team I'm thinking about assembling, but I'm just not sure, is a research team. I think there's a lot of opportunities to scout out new 10x investment opportunities. And I'd love to make this research more open and share this information with lots of people. I'm not sure how exactly this can come together, but I'll keep you guys updated as I think about it more. And the third team that I'm thinking about is more of a video production team, and this is the team that's helping me produce these videos. I definitely would like more help in planning episodes, and I'd actually love to do a live daily show where I have a sidekick where we're discussing some of these topics more in depth. I think it would help a lot if there were more questions and kind of more of a discussion and back and forth. But anyways, if you have an idea to pitch for an episode, please add it in the comments, or you can go to my website www.davelee.tv and share an idea or suggestion. Also on my website, you can submit a video question. You can video record a question with your phone and just upload it on my website, and I'll get it and I'll consider answering it in a future video. All right, if you haven't already, please subscribe to my channel. Go ahead and add a comment in the comment section, and share this video with as many people as you can. Share it on Facebook, on Reddit, on forums, on email, and spread the word, and it'll help all of us out greatly. Thanks, and we'll see you in my next video.